I believe we are live, yes.
Hey, we are live, and welcome to a very special one-off stream. Normally, we go live on Saturdays. However, it is a Thursday. My name is Jake, and this is Daniel, and we are the two out of three co-founders of Stock Unlock. We are here to interact with the chat today, and we are actually live launched on Product Hunt. So for anyone who's been following along, we would really appreciate your support. I'm going to quickly show what that is, and we will be watching for questions in the chat, answering your questions about stocks, doing stock analysis live, all that fun stuff. So yes, Product Hunt is a place where products are launched. It's a good place to get users. And this is our page. I will share this in the chat. Yeah, share this with your friends. Show some support by giving us an upvote. We're also linked from this page. So we'll have some product hunters joining us live as well. And yeah, Daniel, throwing it over to you. How's your day going so far? I know you actually wrote a lot of this post. I think everything looks incredible.
Thank you. Yes, I did write that post. Sorry, I just muted my mic because I am just typing and sharing that we're live right now. So yeah, just might have some clicking going on.
You have my support. Thank you so much, Ellen Versor Estuico. I'm so sorry if I'm mispronouncing that. Swab, hi, hello. It is great to see you. Dave Lund, great to see you. Tuning in from Ontario. Yeah, let us know where you're all streaming from. I'm streaming from New York. Daniel is up in Canada. Yeah, like I said before, normally we are live on Saturdays for our weekly stock talk show, but this is a very special one-off stream. It's great to see you all. Yes, if you're looking for us to analyze any stocks in the chat, let us know. We'd love to do some live stock analysis with you all. What's up, Nub Dub Fub from Oregon? Great name. Yes, it must be 9:05 over there on the West Coast, correct? Hello from Spain. What's up? Router, how's it going? Ryan Headley, great to see you.
All right, everyone. I am officially here, no longer typing. Okay.
Save me, Daniel. Take over.
Yeah, Jake, you're killing it. Okay. Yeah, everyone. So we're doing a one-off live stream today because we just launched on Product Hunt, which I believe Jake already discussed. Basically, Product Hunt is a place where you can launch your platform, which obviously is Stock Unlock for us. And if we can gain support from our audiences and our users to go and upvote the Product Hunt post, then we can potentially get in front of a much larger audience on that platform and hopefully grow Stock Unlock a lot more where we can actually, continue building features. So there's a link at the top of the description. If you feel like it and you're inclined, please click the link and go upvote Stock Unlock, and it would really help us out today. Other than that, let's talk about some stocks, Jake. I know that Airbnb reported some earnings this week. The stock dropped, so obviously it was an awful report. What are your thoughts?
Of course, right? The short-term stock movements always are 100% related to fundamentals.
Yeah, the market's always right.
A lot of people were watching Airbnb stock. The stock has moved a lot, along with tons of other stocks in the market. To me, it did run up a lot before earnings. It seems like people may have been forecasting that they were going to have a beat, things like that. I'd say it was a pretty decent report for them. No positive surprises, no negative shortfalls, in my opinion. Company maintained very high free cash flow margin. Revenue is up about 20% year over year. I still have to really tear through their 10Q. So in relation to this Product Hunt launch, as Daniel was saying, it is a lot of hard work, blood, sweat, tears, love that goes into building Stock Unlock. And it is very funny. We're building a stock analysis platform, and the amount of effort it takes to build takes away time for me using it to invest. So this Saturday, we will be diving much deeper on Airbnb. Daniel, did you take a look at the report? Are you coming here with any thoughts? Because I feel like you might have been trolling me a bit on the stock price fall there.
Yeah, I'm trolling you. I'm 100% trolling you. No, I didn't take a deep look. I glanced at them, and personally, I actually thought it was a great report from Airbnb. I mean, cash flow was up. They got a lot of cash. I think they have $15 billion of cash now, but obviously
Correct.
You have to factor in the debt. So I believe their net cash position is like $6 billion, which is still significant. But yeah, I mean, they seem like they're doing fine. I think the market was a little bit upset about Airbnb because their guidance for next quarter looked kind of weak or weaker than people were expecting. So I think that could be why it was down. But, I looked at it for literally maybe under a minute. It was maybe 30 seconds. So that's what I gathered.
Nice. Well, that was a pretty good quick 30-second look. And like I said, I at least personally don't like to go super deep on things until I feel expert level at it. And I just haven't had a chance to really chew through this report. But same high level thoughts as you, super high free cash flow generated from the revenue, company is still growing. And looking at the company as a business, I love the CEO. The CEO, Brian Chesky, actually went on This Week in Startups podcast, and he's been going on a few other shows directly talking about a lot of the issues people are bringing up with price transparency, expectations of whether you're cleaning your room or not. And what I think people are missing here, Daniel, with the opportunity for this company is not only are they the leaders for just the marketplace of getting vacation rentals, they call themselves a travel company. So my girlfriend is very, very into travel planning. She is actually now using Airbnb experiences as her number one primary search to find things to do over other searches out there, Trivago, Kayak, all those different companies that try to help you find stays. So I think that their revenue streams are going to continue to expand. And they did mention on their, not this past earnings call, the one before that, they are open to acquisitions, and they were very hand wavy on it. So they're sitting on a ton of cash. And sorry to stop the stream. A gorgeous blue jay just flew outside of my window. I wish you guys could see it. Nope, it's gone. Well, anyways, I definitely don't have ADD. Yeah, I like the report. And blue jays are cool.
Right on. Great takeaways.
We'll talk about it more. Go way deeper on Saturday for those of you who like joining us there.
Yeah, I'm seeing a couple questions about Brookfield in general, because they reported this morning. Well, the corporation reported this morning. The asset manager reported yesterday. So funny enough, this is actually what I'm going through currently. I'm planning on making a video hopefully today about the corporation's earnings. And so far, I mean, the market didn't respond that well initially. It looks like it's green now, but I'm going through the report now, and it looks fine to me. Like, cash flow is up 24% year over year. The real estate is doing fine. You know, I haven't dug deep in it yet, but at the surface level, everything looks just fine.
Yeah, and just disclaimers aside, not financial advice. You do own this security, and I also do own Airbnb, yep. Correct?
Yes,
definitely. Well, I'm looking forward to that video. I'm one of those people where I don't own BAM, but I am like passionate about it, which is like a really funny place to be in. I mean, obviously, we're very close, and a lot of my friends through our networks also own this stock. So by association, I am very curious what's happening there as well. But fortunate for you, that sounds like you're going to do that analysis for me, and I'll just watch it. If I did own the stock, I'd probably do some of my own. But
yeah, it's an interesting one. People are pretty bearish on it right now. Not too sure why, but the fundamentals of that company are still just growing pretty strong. So it's good to see.
Awesome. Going to take this quick comment here. Also, for this stream, we are looking to interact a lot with the chat. So if you are lurking there, if you're thinking about sending a comment, come say hi, give us a question. If you want us to look at a stock, we will love to analyze that live, looking to use Stock Unlock here with you all. Comment from El Inversor Estuico, and apologize if that's mispronunciation. I'm using Stock Unlock in my Spanish channel. I hope it is okay with you. That is more than okay. And we are actually, very humbled and grateful when anyone uses Stock Unlock in their channels. It's actually one way that, helps us grow. And if you believe that you're sending us a lot of traffic, send us a message to support. We are looking for creators with big audiences to continue to do partnerships with as we work on this growth. Hence part of this product hunt launch that we are doing today with you guys. So yes, thank you and shout out to you. You are encouraged to do that.
Yeah. All right. So we will also just be talking about stocks, like random stocks, if you guys want us to look at anything. So yeah, let us know in the chat. I actually was just looking at Disney as well. Disney is interesting. I'll actually share my screen here.
Really. Do you own Disney, or have you ever thought about buying shares? I'm just getting a water, which is why I'm off screen.
No, I have never owned Disney, and I definitely do not plan on buying shares. But I saw someone this morning say that, the company's stock price is all the way back down to where it was in 2015. So let's just take a look here really quick. It's now down to $93 today-ish. If we go back, it first hit $93 in 2015, the beginning of 2015. So basically the stock has now lost what would that be, like 8 years of gains. So, people are looking at this and they're like, well, Disney is down significantly. It's back down to prices in 2015. So is it a buy today or not? Well, if we go and take a look at Disney's financials, when we take a look at their income statement here really quick in the trailing 12 months, you can see that the revenue is up. It's actually like at an all-time high. But back in 2015, if we zoom in here, back in 2015, you can see that their profit margins, so the revenue is the green bar, their expenses are the colored bars. And you can see that their profit margins back here in 2015 were much higher, significantly higher. And now the profit margins are quite thin, actually.
Should we play the game as to when they announced their streaming service?
Yeah. If you also take a look at this is the operating cash flow. You can see that back in 2015, it was growing nicely, continued to grow nicely all the way up here until about 2018. And then it absolutely fell off a cliff. So the company basically is not generating nearly as much profits as it was back in 2015. And it's not even close. It's no longer even growing its profits. They're actually down quite significantly. So yeah, Jake, if you want to play a game, when did they announce their streaming service? It was right around here, right around where the company's profit margins absolutely fell off a cliff. What's interesting, though, is their streaming has actually grown revenue, but it has not grown their profits at all. So in my opinion, as a shareholder or an investor looking at this business, I would prefer the company to continue growing its profits rather than growing its revenue. They kind of sacrificed profits for revenue. And yeah, again, as an investor, I actually do not like that. So even though the price is back to where it was in 2015, it's not the same company. In 2015, it was generating a lot more cash. And yeah, so I'm not really too interested in it.
Yeah. Are you familiar with the CEO drama that happened with Disney? How Bob Iger left, came back?
Yeah, but I haven't looked into that too much. I believe Bob Iger was the guy who successfully grew Disney, and then a new CEO came in, announced streaming, tanked the company's profits. He left, and now the original guy is back and trying to right the ship.
Yeah, but relatively original.
Yeah, but yeah, I guess that's a good point. Relatively original, but I don't know what you can do. I mean, they're so deep in streaming now that for them to regain their historical profitability, in my opinion, they're almost gonna have to cut out streaming. And then if they do that, they're gonna tank revenue. So I don't know what they're gonna do. I have no idea.
Yeah, I was reading somewhere, so someone in the chat can fact check me. I believe that they lost subscribers last quarter, but they raised prices. So their profitability on the streaming specifically went up, but that's because they had to raise their prices to do that. And to play the other side of this, it is definitely expected that expenses go up. And I think the story to investors here, even though I agree with you, it's not playing out yet, is obviously you spend a lot. That's an investment into the business because you hope that those margins will come back. And while we are seeing that higher revenue, right? So that's good. The parks are also coming back. Those are obviously reopened from COVID. And we said this on a last stream, Daniel. I'm curious if you agree with me here, because this is a stretch. I, in some sense, put Disney and Apple into the same bucket. Not that they are similar businesses, not that they are meant to be compared and contrasted in the same way based on valuations. They have very different business models, but they're both very, very large, existing big businesses. And I wonder how much growth they have left in them. For example, Apple, we're not really seeing them innovate with AI, with the other tech companies. Also with Disney, they are building on their existing theme parks as well as the brands and characters they have created. And of course, for both Apple and Disney, no one can argue some of the best companies in the world, best brands on the entire planet. Definitely not companies to bet against. But for investors who are looking for growth, this is not financial advice. I'm curious what you think about this, Daniel. It's hard for me to play that story when they're already so big.
Yeah, I mean, I think that comment applies a lot more to Apple than Disney.
Why do you think that?
Because Disney is a much smaller company. Relative to Apple, it's much smaller. And Disney, Warren Buffett, I believe, owned Disney at one point, and the reason he owned Disney is because they can essentially recycle all of their content every 15 to 20 years, raise the prices on it with inflation, and then get all of that cash flow. He basically referred it to, it's like an oil well that refills itself every 20 years. And those were his words on Disney. But Yeah, I think Disney so far has just really messed up by going all in on streaming and sacrificing all their profits to do that. But in terms of Disney's growth, I think it could probably continue growing with just overall inflation because, again, they can just recycle their content every 20 years.
But does that excite you as an investor?
No, but it doesn't mean that it's. I mean, I would say the same thing about Apple. Apple could probably grow with inflation as well. But yeah, as an investor, no, that doesn't really excite me.
Yeah, fair enough. I think also fair point too for comparing the market caps. Yes, Apple multiple times bigger, but definitely both multi-billion-dollar companies. From Stoccato here, we have a little bit more data. The ARPU, I'm going to guess that's average revenue per user, in streaming went up, but Disney Plus Hotstar average monthly revenue per paid subscriber decreased from 74 cents to 59 cents. Thank you for that, Stoccato. Also, Stoccato, definitely hear you in our Discord to take more questions from the chat, and we are doing that today. So keep them coming. Daniel and I are going to be very much on the chat, and for those of you listening, taking stock suggestions live. This is our product hunt launch stream. If you haven't yet checked us out there, go show us some support. What do you think about this comment, Daniel? Apple buys Disney, and there you have it. Growth.
Yeah, I guess so.
Does Apple have enough cash on hand to buy Disney right now?
I actually don't know. I do believe that Apple is taking on more debt to buy back shares, though. Like their balance sheet, in my opinion, is not the most pristine I've ever seen. They have actually quite a bit of debt. I don't think it's a problem because they generate, like $100 billion a year in cash flow. But yeah, it's definitely not a clean balance sheet that they got going on.
Should we look at that on Stock Unlock, the Apple balance sheet?
Yeah, sure, actually.
I did not know that. They are taking out debt to buy shares. So we've talked about this on the channel before, that usually not a good thing. But I also know a lot of smart people work at Apple, so maybe they know something we don't.
Yeah, please fact check me, but I believe I read something recently that said Apple is currently issuing bonds or something and taking on more debt, probably to supplement more share buybacks.
What's strange to me is they have so much cash, right? I guess I'm just curious to understand the strategy behind that. If anyone in the chat knows, feel free to chime in. Love to chat.
Well, the thing is, they announced a $90 billion share buyback program this year, and they generate about 97 billion in annual free cash flow right now, I believe. So if we take a look, actually, they generated 97.5 billion in free cash flow in the trailing 12 months. So if they announce a $90 billion share buyback and they want to do all of that this year, then they're going to have $7.5 billion left over to basically run the business, pay dividends, and everything else. And you can see their dividend payments are 15 billion. So on a $90 billion buyback, $15 billion dividends, the math there doesn't work. So they're going to have to supplement that with debt if they actually want to execute on that $90 billion, which could be why they're issuing bonds, if they are.
Interesting.
Yeah, it is. Anyways, yes, they have $51 billion of cash right now. I don't think that's enough to buy Disney. I have no idea what.
I think the market cap on Disney, when I just looked, was around 128 billion. I'll go double check that.
But yeah, if you take a look.
Oh, sorry, no, I misspoke. It's 184 billion.
But anyways, if you take a look at their assets, I mean, yeah, they got 350 billion of assets, but they got 290 billion of liabilities. So they do have a significant amount of liabilities. Again, I don't think this is a problem. I definitely don't think Apple's at any risk or anything like that. It's just, again, this is not the most.
Yeah. What's the amount of long-term debt?
100 billion. Looks like it's been around 100 billion for 6 years now.
Yeah. Well, while they're generating cash, I mean, they can definitely manage that. No crazy red flags to me, but I do agree with you here, Daniel. It doesn't make me feel excited. But, when a company is this big and has this much buying power pricing power too and all that, I do think that there's games to play with debt financing and stuff like that. So I'm sure the people that work at Apple are incredibly intelligent and not making moves that would destroy the company, but seem better balance sheets.
Oh, yeah, absolutely. Like if you go to Google, for example, and we go and take a look at their balance sheet really quick. Well, right away, you can see they have 77% assets, 22% liabilities. Apple, I think, was around 50-50. You can also see 31% of Google's assets are in cash. They have a ridiculous amount of cash. Their total cash is 115 billion, and their total liabilities is 109 billion. So they could actually take their current cash position and wipe out all of their liabilities if they wanted to.
That's incredible.
Yeah, so they have the 14 billion of long-term debt. So yeah, that's what I mean. Google's balance sheet is just like so much cleaner, which I find attractive. But yeah, that's not to say Apple is gonna go under or anything like that, though.
Yeah, to add a little bit of color here, Stoccato again. This is about Apple. So they want to remain net cash neutral. This means that Apple will have an equal amount of cash and debt so that they balance to zero.
Yeah, that makes sense.
Math going math on us. You're getting a lot of questions here about TNT. I think we might have done a dive on that in the last stream, so I'm not sure if there's anything new here to rehash if we want to send people to that clip, Daniel.
They're a small office REIT. They're down a lot. I believe the dividend yield is around 12% now. They just reported earnings. I don't want to dive too deep into this stock, but basically my opinion is the dividend is safe. And the company's working through it. They should be okay, in my opinion.
Am I confused, Daniel? Is this the REIT we talked about last stream, or am I getting it mixed up with a different one?
No, we talked about Dream.
Yes. So I am getting it mixed up.
Yeah.
Makes sense.
TNT is a very small cap Canadian company, so I don't really want to talk about it too much on streams.
Yeah, fair enough. I feel the same way. I know that there are some mystery stocks we own. For example, like I own a very small cap stock, and just I don't want to talk about it because we could literally make up the volume of it in a day, right? And then like it just gets into weird territory.
Yeah, exactly.
Okay, there's a ton of great comments here, Daniel. I'm not sure if you want to guide us here. If not, I can cherry pick one, but a few stocks.
I know you're a small cap stock. Just to be funny, I know you're a small cap stock, and I think the market cap is under 30 million.
When I bought it, it was 16 million market cap, and now it is around 27 or 28. Yeah, I mean, it's been a pretty good buy. I put a really big chunk of money into that too for myself. So,
and isn't that in your retirement account?
Yeah, dude.
I love it.
Munger vibes, man. You gotta feel that conviction. Isn't a diversification a hedge against uncertainty or something? What do they say about that?
Yeah. That's
but to give credit where credit is due, Stoccato and I actually had a really great conversation about Indian stocks. So I have the exact opposite mindset. This is not financial advice. I purchase an ETF to get exposure to India because I just genuinely don't feel that I can confidently invest in single Indian companies. For example, we saw what happened with the Adami Group from the Hindenburg Research short seller report. If you had just owned that one, you would be pretty down on your luck. However, when you get the basket, it's sacrificing some potential future gains for more of like an average distribution of returns, in theory, making a bet on the Indian economy. So no right or wrong here, just depends on what type of investor you are.
Yeah, totally. We're asking about PG. I believe this is Procter and Gamble.
PG bro. What's up, bro? Thank you for this question, comment. Day trading.
That's the comment, PG bro. Bro, I got you. Okay. All right. So Procter and Gamble is one of those huge consumer staple companies that, almost everyone in Western society probably uses their products. So massive company, not going to go anywhere. I believe Warren Buffett also said that if you invest in like Procter and Gamble, Coca-Cola, McDonald's, I think it was Pepsi. Someone, again, please fact check me, but he has a quote somewhere that said, if you throw money into these stocks, like you're probably going to do great over the long term. And I mean, Procter and Gamble, if we compare this to the SPY, it's actually outperformed the SPY a little bit, but overall seems like it's been a great company. My issue with these stocks is if we go to Procter and Gamble's revenue, sure. Very weird revenue graph, actually. But you can see that revenue right now is around 81 billion. It's been growing since about 2016. It doesn't really grow that quickly though. And if we go to the company's free cash flow over the past, let's go to 2004. Let's go to 2003 actually. So over the past 20 years, it has grown revenue at a compounded annual growth rate of less than 3%. And you can see that, or sorry, this is free cash flow. So it's grown free cash flow at around a little under 3% over the past 20 years. But the stock currently is trading for a price to free cash flow of 30, which I think is very expensive for a business that's not really growing that much. And this is kind of the same case for companies like McDonald's. And if you go to companies like Pepsi, just let this load. Sorry, it's slow when I stream.
Is that Canadian internet? I can. Okay, cool. I was gonna say you can get it up on my computer.
Yeah. So McDonald's. Let's zoom out a bit. If we go all the way back here to like 2000, wow, all the way back to 2003, its price to free cash flow was around 13 in 2004. Kind of went up, and then in 2009, 16 went up to about 25, and then it kind of hovered here around 20. Then I don't know what happened, but McDonald's has started becoming super expensive, in my opinion. Price to free cash flow is now around 40. So basically, all these like consumer staple companies, if you go take a look at Pepsi and everything, and Coca-Cola too, it's the same story where these companies, like their price ratios have just been expanding a lot over the past about 5 years.
I also saw this with Hershey's. It seems that investors are really flocking towards brand names and looking for safety in a turbulent market.
Yeah, I believe that's what's happening. But what this ultimately means is those high price ratios. Like McDonald's now has a free cash flow yield of only 2.6%. That's how expensive the stock is. So it can only
they've been growing their free cash flow, though, right? I mean, if we look at the yield on cost, I'm curious.
I actually don't think they've been. Oh no, they have.
Yeah, so I'm sure if you look at the yield on cost, it might not actually look too bad.
Yeah, I know, but I mean, you're still getting a 4% compounded annual growth rate to free cash flow at a 40 multiple, which to me is just like way too much.
I agree with you there. Not a lot of meat on the bone, so what we like to say.
Yeah, so it just makes me skeptical on these companies and how they're going to perform over like the next 5 years. I mean, I throw Apple in this same boat. Apple obviously is growing its free cash flows more than McDonald's and whatnot, but like right now, Apple's revenue is declining. Its profits are actually declining. Everything for the business is currently going down. Yet this company's stock is at an all-time high.
Yeah. What are your thoughts about that, Daniel? Like the company reported numbers are kind of down. People looked at the services revenue, saw that was up. They looked in alternate geographies where they're selling like Southeast Asia and saw that that was up. Do you think people are just trying to find a needle in a haystack to feel happy about here? Is there something you and I aren't seeing? I just don't understand why the stock went up so much on this report, personally.
Yeah. I mean, their services business grew strong. They're growing in the Asia Pacific region strong, but personally, I don't think that those segment growth is worth a 30 times free cash flow multiple for this business when overall things are actually declining. So, I mean, yeah, I believe Apple does have tailwinds. I do believe it will be a bigger business in the future than today, obviously, but that doesn't mean I'd be willing to pay this price for it. Like back here in December of 2022, it actually got down to a reasonable price of 18 times cash flow. And now it's just like bounced all the way back up to 28. So I don't know. I've said this on my channel. I've said this on our streams before, but I'm just kind of skeptical of Apple's returns over the next like 5 to 10 years. Over the long term, it's probably going to perform fine, but at these prices with its current growth rates, I don't see how it's going to deliver 10% over the next 5 years.
Yeah, one thing that's a light concern for me, I have not really heard too much about Apple on AI, and I understand that they like to perfect things. I also know that's worked well for them. So what do I know? Maybe they're making the right move here, but with how fast things are moving, this could be like a Microsoft situation with Microsoft getting left behind for mobile, right? And now they're coming in leading AI. I would really want to see Apple carving a niche there, finding ways to make money, because it looks like every other tech company is doing it. So, like tech is always advancing. Like, is Apple innovating? Are they making new products? I've heard a rumor about an Apple car, but like I don't know. It seems like since Steve Jobs has left, it's just Tim Cook's kind of just keeping the car going on the highway. Again, doing a fine job, right? But I think there's a difference between sustaining a huge business versus firing growth and innovating. So I would like to see a little bit more of that from them.
I mean, they did announce AirPods under Tim Cook, didn't they? And AirPods is like a freaking massive business.
It is, yes. I need to be careful to not let my own feelings about Apple as a consumer bleed in here. I think you and I are both not fans of Apple as consumers, and that definitely colors, I think, a little bit of the conversation we have.
Yeah, I'm not an Apple user, personally.
Yeah. Well, we're getting lots of great comments here. Thoughts on Pool. So I don't know if we want to do a full analysis on this. We've talked about it before. I just want to call out this company. I personally always look for companies where you can understand the business and that they're unique and have a moat. Pool, as you might guess, is a company that installs swimming pools and things like that. It's actually historically one of the stocks that has, I believe, some of the best returns. I'm not sure where they rank, but they're up there. I'm curious, Fub, do you own Pool? Daniel and I do not. My thought on it was I thought everyone built their swimming pools during COVID, during the construction boom and everything. So when we were looking at other businesses like Home Depot, Lowe's, and other kind of like home improvement type businesses, it does look like that they do run, and then during recessions go down because people run out of money. So just very much questioning if there's a lot of growth there in the near future in that stock. But it has been a while since I've looked at it. Not sure if you had thoughts there, Daniel.
No, I largely agree with that. I'm looking at the company right now quick.
Yeah. Anything screen share worthy?
Yeah, I'm doing it. Not freeform here. So what Jake is basically saying is when times are good, you can see people spend more money on pools. And then in 2008 to basically 2010, it looks like the company's revenue actually declined. And then it took all the way till about 2013 to get back to previous revenue highs. So about 6 years to recover, it looks like. And right now you can see in their trailing 12 months that their revenue is actually starting to come down a little bit. So exactly, you saw this big revenue spike when there was a lot of free money in the economy. People probably built pools, spent some of that money on luxurious things. But now that money is becoming tighter, I'm just skeptical if, pool is going to be on the number one thing people are going to want to spend their money on. So I'm just not confident that revenue is not going to start declining. And what's their cash flow doing, actually? I mean, their cash flow is apparently still spiking massively. Holy smokes. Well, so yeah, we'll see. But it doesn't make me comfortable, personally.
When I think about businesses like this, I haven't looked at their customers. So I actually don't know how many of Pool's customers are just regular people or contractors. If it's contractors that are constantly building and they have a steady need for pools, that's great. If they're mostly consumers, though, these businesses are interesting. It's kind of like a car company in a way where you make a one-time purchase with them, but you're not buying a new car from the same dealer every year. Most people aren't. I'd imagine if you install one pool in your backyard, you're not going to be a repeat customer here every year with this company getting a new pool every year. Maybe someone could prove me wrong, and there's like pool nerds out there that have that kind of money. So yeah, it is just very interesting to me. Like that revenue graph really showed the revenue go up in the early 2000s. And then it looks like it took at least like 5 years, if I was reading that graph correctly, to come all the way back. So especially with the huge surge we just got from COVID, I would just really need to feel confidence with that business that they are continuing to grow on that revenue. I don't feel confident with the little research I've done that they will.
Yep. We have a question here from Patrick. How bad are things at TrueLeave? They're still not profitable and recent earnings aren't great, but it's down from $50 to $6. So for those of you who don't know, I was a big bull on TrueLeave for a while, actually, but I did my best to stay objective, and over time, I kind of started to realize that this business is not a good business at all, just to be straight up. The management gave investors a lot of promises that they never executed on, never delivered on. I still think that they're doing this to investors, which I really dislike, which is also why I don't give this company a lot of attention anymore. Really don't like talking about it that much, honestly, but I will.
I think you've also plenty of times have explained your thoughts. So
I'll just update with the recent earnings. So basically, Kim Rivers, the CEO, said, hey, we're going to be free cash flow positive in 2023. That's what they told investors. I'm very pessimistic on that. I don't think they're going to do that. I actually think they're going to lose money for the entire year. And Q1 is only reaffirming that belief for me. So I think the stock deserves to be down straight up. I think it deserves to be at $6.
Yeah.
They've dropped the ball massively.
And Daniel, I think speaking for both of us as we are on this investing journey, obviously learning things along the way, one mistake I have personally made, I did not super heavy, but buy some shares of Trulieve as well, is how much you put trust on management. I know there's also been other companies where CEOs say one thing and then, hey, I'm going to grow this business. I'm never going to leave this. And then 6 months later, they sell out for a price half of what they quoted before. And you realize, why did I trust this person? Or was like a big thesis of my investment resting on them? I got a little bit duped by Kim Rivers as well. I think one good way to think about this is they were actually a very good, fast-growing cannabis company. They were great on paper. They were growing well. And then management came out, bought Harvest, and then additionally said and promised shareholders, not promised, but forecasted to shareholders, we are going to see these synergies, being a little hand wavy here, just like this is going to be very positive effects for the business. We're going to start generating more cash flow, get profitable. And just back to what you were saying, not only did none of that happen, but the CEO is still making promises. And now I agree with you, right? Oh, we're going to be free cash flow positive. Yeah. Well, you said a lot of those things before about other aspects of your business and they were all wrong. So Kim, very respectfully, tell us why we should believe you now. I doubt that she's ever going to see this, but let us know. We're looking for reasons and just want to have honest conversations about stocks. We want honesty from these executives, but
yeah. And one thing you also have to watch for with these cannabis companies is they pay a lot of tax because just the way the tax system works in the US, they legally have to pay a boatload of tax, like a lot. So what they actually do is on their operating cash flow statement, what they can do is delay their tax payments to boost operating cash flow and make them look like they're free cash flow positive. But all they're doing is delaying tax payments and increasing the liabilities on their balance sheet. So is that actual cash flow? No. They're just transferring and delaying, liabilities. So that's also what Trulieve does, by the way. So if you're going to look at their operating cash flow numbers, go to their actual 10Q filing and look for those tax delayment payments. They'll be in like the tens of millions. So anyways, that's my rant on Trulieve. Lost a lot of money on it. Not too stoked about it.
I'm going to just kind of beat this with a dead horse here and plug Stock and Lock a bit. Thank you for the 85 viewers who are with us live right now. We really appreciate you guys hanging out. If you don't know us, my name is Jake. This is Daniel. We are big stock nerds. So Stock and Lock will really help you avoid companies like this. One of the reasons why we are building Stock and Lock is because we did not have this when making investment decisions in the past. And if we did, we would have saved losing a lot of money. So if we look at this, we could see analysts are really bullish, which is interesting, right? I mean, analysts are just people like you and me making predictions.
Yep.
But as you see, they are not profitable. While they have top line growth that is being sacrificed for bottom line growth, their returns are very, very bad. 1.25 is almost as low as you can get. And again, Stock and Lock is totally free to try. Part of the reason for this stream is we are doing our best to grow. So if you have not yet, it would mean a lot to us for you to check out our product hunt page. I'm going to drop this link in the chat. And if you can take a look there, show some support. If you haven't yet tried, make an account, tell your friends about it, and we really appreciate it. Advertisement over. And yeah, that's how you can avoid bad investments. A lot of people ask, hey, how can I find good investments? I think that's a good question to ask. But the cooler question to me is, how do I avoid bad investments? Because if you start by process of elimination, you already lower the pool of investments you could be looking at, which is obviously very helpful when trying to make a decision on what security you might want to buy.
We got a question about, let me see, I believe it was about ABST. So this is a stock I actually used to own. Jake's going to call me a swing trader, but I sold it. And it's up.
You hold it for over under a year.
I did not hold it for a year.
I didn't know. No hate, no blame, no shame over here.
Yeah, it was just one of those situations where I thought it was cheap. It ran, and then I did not think it was cheap, so I sold it. But it is up 33% on the day if we want to round up. And someone just asked us, What do I think about this? Well, I actually don't know what's happening here. I imagine they reported.
Same.
I imagine they reported earnings. Let me just take a look at their metrics. Oh my goodness. Let me just take a look at their metrics here really quick. So operating cash flows kind of flattened out here at 42 million a year. What's free cash flow? Free cash flow is around 40 million. The thing about Absolute Software is when I owned it, I dug through their financial statements and they did some sort of weird debt deal where they took on debt, and in the clause of the debt, they agreed that they could not raise their dividends or buy back shares. So I was like, okay, the only way that this company can return value to shareholders then is to just build up cash on the balance sheet. And they can't really distribute that to shareholders, which I thought was like not very attractive. So I actually don't see what's going on with this company in the financials, but yeah, I actually don't know. I have no opinion on why it's up 30% today.
What? How about walk us back? What made you sell the stock?
Well, I don't remember the exact price I bought it at, but I bought it at one price and then it ran like 30%. And then I was like, this isn't really a value investment for me anymore. It's also like not a stock that I really believe in long term. So I basically just bought an undervalued stock. It got to fair value. I sold it. Additionally, when I read that in the financial statements, I was like, this company can't even raise its dividends or anything. So even if free cash flow grows, like all I'm getting is increased book value, which I wasn't really looking for. So like I like dividend growth stocks or stocks that are growing that I believe in for the long term, and Absolute Software just didn't meet that for me.
Yeah, very strange. Well, I guess we'll see how that one plays out. I mean, of course, the share price can appreciate. They keep on improving their financials, but yeah, if people were buying it for a dividend, that's kind of meh news to hear.
Yeah.
Here's a great question. I feel like you and I could riff on this for a bit. How do you assess the character of management? I think this is an incredibly strong question, especially when we were just talking about last stream, Daniel, how Warren Buffett and his partners tend to assess management and assess a business well before they look at financials or the valuation.
Just to go back to ABSG really quick, they're getting acquired. That's why they're up. I just found news they're being bought. That makes sense.
Well, there you go. I bet they announced the price. Usually what happens I find very interesting is stock will get pinned by both like computer algorithms at hedge funds and other places when they think that there'll be a terminal value and people start arbitraging that across exchanges for pennies on the dollar, all that fun stuff. But
yeah, exactly.
Yeah, they didn't mean to rush us along here. Any other thoughts on Absolute Software before taking this one?
Nope, not at all. How do you assess the character of management? This one is a very subjective question. There are some analytical things I do where, I like to see companies that have lower stock-based compensation. I like to see high insider ownership, and preferably like to see insiders buying the stock. So here's an example. I purchased a stock, Magnet Forensics. I actually purchased that stock on my flight. Well, I researched it on my flight over to Portland, by the way, Jake, when we met up. And then I bought it when I landed.
Oh, nice.
but that stock in terms of percent gains was probably the largest percent gain I've ever made. It was close to 200% within a year. And
Cha-ching.
It was nice. But also I was sad about it because I honestly thought that stock could more than 10x over 20 years. So the acquisition, it ended up getting acquired. But anyways, the main reason I really liked that stock was because it was founder led, and the founder grew it from nothing to, I believe it was something like it was about $100 million in annual revenue. He still owned 75% of the company. So it was a public company, but he had 75% of the shares. So
what?
He was fully invested in that company. Like,
oh, that's so cool.
Yeah.
Like goals, dude. Stock unlock public. No, people can't even buy the stock because founders owned all the shares.
Yeah, but you got to think about it. you got to think about it too, right? Like, if he owns 75% of the stock, then he does massive stock-based compensation to pay his employees and dilutes the shareholders. He is the number one person he's diluting. He's lowering his own ownership in the business by doing so. So I've noticed that when companies have high insider ownership, they typically also don't have high stock-based compensation because the insiders are the largest shareholders and they want to protect their own value as well. So their their incentives are directly aligned with the shareholders. So that's something I really look for in my investments now. Um, I do own stocks where there's not a lot of high insider ownership. Manulife is one of them, but yeah, when
Yeah,
I'm
it's
when I'm
not a it's not something you need to
yeah,
have, but it's definitely like you're saying something nice. And yeah, sticking to this question here on assessing
yeah,
character of management, I agree with everything you said, Daniel. And to make this very tactical, good takeaways for our users, let me know if you agree with this. I have two big buckets for management when it comes to assessing their quality. One is their financial actions, and the other is their social actions slash track record. So, adding on to what you were saying, are they buying the stock? Do they own the stock? How are they managing stock based compensation? Some bad things that we see management do is, for example, not in every situation, but in a lot of situations, take out debt to continue paying a dividend, for example, when the company's free cash flows are down. That can kind of give you a hint where management might be more interested in keeping the stock price up for both their own options and compensations, as opposed to the long term value for shareholders. So there are a few financial things you can look at for share management, dividends, how they're taking out debt, and just managing the company in general. I think a founder led company is one really good way where almost all the time founders, if they're still running the company, are very good people to get bet against. And the social proof, Daniel, for me is twofold. One, do they stay true to their promises? So not to keep on going back on Kim Rivers over here, CEO of TrueLeaf. She has made a lot of promises to shareholders that were not kept. That to me is not a great character of management. And now anything they say in the future, like we say here, is being brought to question. So obviously, management following through on their promises over time is something that will continue to gain social credit and proof, in my opinion. You can also, with the exception of founders, look at a track record. So, for example, Bob Iger came back to Walt Disney. You could have reasonable confidence that because of Bob Iger's past track record at Disney, that you could make reasonable assumptions about his care for the business, his focus on shareholders, looking at all of his past experience. This also happens when CEOs transfer from company to company. So, yeah, look at the financial moves. Also, follow their social actions, right? At the end of the day, these are just people too. They're humans like you and me.
yeah.
And you either
A
trust
good
them or you don't.
yeah, a good company for an example of what you just discussed actually is Equitable Bank. I know you don't like banks that much, but this company, before I invested in it, I did all of the things I talked about. I looked at insider ownership. The largest insider owns 20% of the company. Big green flag for me. They also consistently buy millions of dollars worth of shares, increasing their position. Green flag. Low stock-based compensation. You know, those things that I talked about, high insider ownership and low stock-based compensation tend to go hand in hand. So that was another green flag. Then I also looked at their previous guidance. So I went back to like 2015 or whatever it was. And I looked at, okay, what was the company guiding in 2015? And did they end up meeting those targets? And every time I looked at their historical guidance, they ended up meeting it or exceeding it. So that was another thing that you're talking about. Like, you can go back in time. These companies have these reports on their websites, where they should. You can go and look up, a 2010 report and see, okay, what were they guiding? And then go and look at 2011. Boom, did they hit it? Like, what ended up happening?
Here's a management style I like: under promise, over deliver.
Yes, I agree.
Definitely. Looking at the chat here, we do have some great comments. So I love how you two talk about stocks. I used to invest so cluelessly and lose a ton of my savings. Stock and Lock and you helped me learn how to approach stock in a very logical way. Hashtag no sponsor. Thank you so much, Home Some Space. This is the stuff we live for. This is why we create Stock and Lock. This is why we love interacting with you all on the stream. Really appreciate comments like that. Thank you so much for letting us know. Looks like we have some agreement here. Ryan said, excellent point. That I think was when I was talking. Maybe you, but I'll take credit for that one. Just kidding. That was probably you, Daniel. And sorry, one last one here. Just dogpiling on what we were talking about. ROIC. I do agree with this. Another good metric to use to assess management. Just make sure that management has stayed constant for that ROIC period, where obviously management can change. So want to give credit where credit is due.
Yeah, ROIC is an interesting metric because companies can go through periods where they have incredibly high ROIC, and then because like Zoom is a great example. Zoom had a ridiculous ROIC when everyone was working from home. And then, I believe it got up to like 30 or 40%. So people were super excited about the high ROIC. And then within 1 year, it dropped all the way down to like 1% and went negative again. So it's like companies can have these booms of ROIC, but they're not sustainable. So that's another thing I would be um, aware of. Just because it's high right now doesn't mean it always will be. Nick says, "Hi, Jake and Daniel. What have you done in your past when you had a very minimal capacity to invest? What do you recommend for someone who has small sums of money, $200 to $300 a month?"
I just want to say right before we answer this question, we are not financial advisors and we legally are not allowed to give financial advice. Everything we are talking about here before and what we're about to answer is purely educational. Please consult a financial professional with these questions. We are very happy to share opinions for how we do this, but please do not take this as advice or a suggestion.
Yeah, just
Disclaimer out of the way.
Yeah, just opinions. And also talking about personal experience. So when I had little money to invest, basically what I did is I put all of my money into tax deferred accounts. So like in Canada, you have a TFSA or an RRSP retirement account. Um, yeah, I prioritized maxing out those accounts first because you can essentially defer tax payments or not have tax payments at all on your gains, which is massive. And then yeah, I actually remember when I had a $12,000 account that I only owned 4 stocks. I did
Well,
not.
this person doesn't have $12,000. They have 2 or 300.
No, they're talking about discount or DCing 200 to 300, and I'm just using personal experience. I'm not
Fair enough.
So when I had around a $10 to $12,000 account, I only held about 4 stocks. I did not diversify that much, and I only put my money in the stocks that I felt were the absolute best opportunities. So that's kind of what I did.
Yeah, I think this is a great question. I'm going to generalize it a bit more. I don't have tons and tons of money, but I want to get into investing. What should I do?
Yep.
The first thing you should be doing is learning as much as possible. So you should be studying companies' earnings statements, going to their investor relations page, of course, using sites such as Stock and Lock. Obviously, we think we're the best and lowest price, even though we do have a free tier for you all, where you just want to gain awareness of these companies. When you're investing, there's nothing wrong with just going into an index fund. And then you don't really need to think about it at all. You should pick a set amount of money that you want to put into investments every single month. And that's going to keep you strict, regimented, and having money constantly flowing in. I'd say if you're not confident with stocks, it's very risky to purchase individual securities. And there's nothing wrong with sticking with indexes. If you did want to start buying individual stocks, make sure that you're studying the businesses a lot and you really could explain to a 5-year-old how their cash flows work, who's their management, and what their business is. I think that is a great way to get into it and just go in slowly. One mistake I made personally, Daniel, was getting really excited and going super heavy on certain stocks. So I'd find a stock that I liked and get like really excited about it, kind of talk myself up and, without Stock and Lock and any other tools that we have now, put in like just start a really big position. In hindsight, I think that was a little bit premature. And mathematically and statistically speaking, you can't argue with slowly dollar cost averaging buying controlled buys over time. I think it also slows your roll too. The best investors we see are people who live in Omaha, not Wall Street, people that are very calm. They're not ever feeling rushed to buy a stock. They're not short-term day trading. We'll include swing trading in. I think that's very fair. And within the value play well as Daniel, you are welcome here. So yeah, let us know if you have any follow-up questions there. We love answering questions like that. It's part of why we are building Stock and Lock as well.
Yeah, that was a good answer. One last thing I would say is if you are investing, I'd say like under $500 a month, then you do also want to focus on how much you're paying on commissions. So I would try and find a commission-free brokerage because, with my bank, I invest through my bank and I pay $10 per trade, I believe. So if I'm investing $500, then that's like, what is that? Is that 2%? I believe that's 2%. So I'm paying 2% just to buy a stock, which is pretty big. And if you're investing 300, then you're paying almost 4%. So that's a big hit right away.
Definitely. We got a good quote here. As Buffett says, just don't get taken out of the game, i.e. taking big risks. Yeah. Don't, again, not financial advice, highly suggest against using margin. So be very careful with brokerages like Robinhood. I think there's a lot of great things they do, like make it very easy for you to buy and sell stocks, no commission. This isn't a recommendation or non-recommendation to use them. Just know that depending on your brokerage, they will push things on you like margin and stuff like that. Again, we are not financial advisors, but that is very risky to do. I don't believe Daniel and I have ever utilized margin. I can at least speak for myself that I never plan on it. Again, that's not saying it's wrong or right to do, but it is a fact that you do risk losing more money sometimes. And there's a little bit of gamification in some of these apps where they will try to push you into taking out stuff like margin. Just really make sure that you talk to a financial professional and fully understand all the implications of trading vehicles such as margin, as well as buying options. We don't talk about options on here that much. That doesn't mean they're good or bad. Again, just don't listen to the person at the bar as to what stock you should buy and sell, or your parents or your best friend. Maybe they're right, maybe they're wrong. Make sure you're always doing your own research.
Yeah.
A question here about Airbnb earnings. We did talk about this at the beginning of the stream a bit. Definitely come in for our weekly streams on Saturday. I personally just haven't had a time to take a full look at the report. We've talked about it very briefly. If you want to look at this recording, it was one of the first things we talked about. Hang out with us on Saturday. We post the recordings to podcast as well as our YouTube channel, and we will be taking a pretty deep dive on the most recent Airbnb earnings report there, but not prepared to talk about today. We like to study and be very prepared for these.
All right. We also talked really cool guy. This is so funny because he was like one of my first YouTube subscribers and followers, and I always remember just really cool guy.
I mean, true.
Anyways,
look at those sunglasses. I mean, come on, 10 out of 10, cool.
I discussed Brookfield near the beginning of the stream, so if you're interested, really cool guy, go check that out. We also have a question here from Nick. Jake, if you want to take this one.
Yeah, I'm going to read it first. How do you initially find the stocks? How do you narrow your search by using Stock Unlock? I feel like this question was planted. It's so good. All right. This question is asking, how do you find good stocks? I'm also going to add to this, how do you avoid bad stocks? Daniel, do you have any prediction as to what tool I'm about to go in right now in Stock Unlock?
I would assume the screener.
Ding, ding, ding. Wow. You really know your company, man.
That's right.
So, yes. Investors often ask themselves, hey, Jake, Daniel, cool. We talk about stocks. It makes sense when you talk about it. But then I sit in front of the computer and get really confused because I don't know what stocks to buy or how to find them. We got you covered. Follow what I'm about to show you. So this is the Stock Unlock stock screener. What a stock screener is, think of a search engine for stocks. So what you're seeing here is just some default stocks returned. However, these don't really look too useful for us. A lot of them are on non-US exchanges. So I'm going to walk you guys all through how to query for stocks that you'd like. The easiest thing you can do is we actually do have some presets here. So whenever you're searching, you can set different constraints. I want companies with this much revenue or growth. And here's one example. So we could look for the best Canadian dividend stocks as a quick to apply filter here. We have 41 results. I'm going to make this a little bit bigger. And right here, this is where you start searching for stocks. So if I was looking for Canadian stocks, I might care about the market cap and things like that. So I'm going to come in here, make sure that I start including those columns. And yeah, we can even sort this on market cap. So maybe I want to try to find smaller companies. I always like looking at the insight score too. So if you're not familiar with our insight score, this is a huge power of our screener. We take a lot of complicated financial concepts and simplify it to a number between 1 and 5 across several different categories for an investment. So you might care about dividends, you might care about profitability or growth. These are all filters that you can change here. So this might look a little bit daunting at first. Don't worry. Everything is defined here with the question mark icon when education mode's on. And if you wanted to look for stocks with certain scores, we can come in here and say, I only want the best of the best. We're going to do 420 to 5. So you could apply that filter and then save it. And now it's going to redo the search and only show insight scores that are that high. It looks like we have 9 here. I'm seeing BMO, ERF. So this is where I will pause because I don't want to talk too much. But what I like to do is actually go through these, open a few stocks and start analyzing them. The right way to analyze any individual security, in my personal opinion, is you have to understand what the company is actually doing. So while we wait for this here to load, we could scroll down here, get a brief description about what they do. This company engages in exploration, development, and production of crude oil. I'll be honest, I don't know a lot about this business, so it would take me a while to fully analyze this, but I'd start by looking at the stock's insight scores, dive a little bit deeper into their ratings, understand where they're good, where they might be bad. I would also look up other competitors of this business and start to just really dive on management. These things are meant to take time. And lastly here, one of the best things you can do for later is if I wanted to make a watch list for a Canadian dividend stocks to watch, I can just create that here. Boom, I have my new playlist. I might go and add a couple other stocks to this. And now let's imagine I leave Stock Unlock and come back later. Don't worry, Daniel, I am almost done monologuing here. Now in our watch list feature, you can come back, see all the stocks you wrote. You might want to write notes here. I really liked this one, but still need to look at management. We're also very compatible on mobile. You can use all these features 100% for free. We're a very consumer-friendly company. We don't try to lock you guys into weird subscription deals, nothing sketchy. You literally can use the site for free or create a free account, which doesn't even ask for your credit card. We don't even need that. So you can try everything, all of our features, no risk. Of course, we do ask for a small monthly or yearly fee. I believe right now with our coupon, 25% off, it is $8.99 perpetually for a month or $89.99 a year. And this is the software that Daniel and I use. Before Stock Unlock, we had to balance subscriptions to multiple applications that were not giving us as good information. So we're able to use Stock Unlock for over 90% of our research needs today. Anything to add here, Daniel, or to follow on? I guess you could also look at public watch lists too to see what other people on Stock Unlock are creating and sharing, which is another way to get good stock ideas. So good friend Daniel Pronk here, 1,379 followers on this watch list, and you could click in on it and see all the stocks that he is watching.
Yeah, no, I think that answers my questions.
I thought I lost you for a second, which is why I flipped back. I was like, did my internet cut out 10 minutes ago and I've been speaking to myself? And yeah, these are public too. So I'm actually going to copy this share link. And again, you don't even need an account to view these, just so we can tie these back into the stream. All right. I guess, should I keep going there, Daniel? I think I got the full thought out. Awesome.
No, I think you did it. Really cool guy asks.
I want Pat. I want a 5-star.
Really cool guy asks. I'm feeling like I'm growing older with you, Daniel. Lol. Maybe one day we can all have a call on Discord or have a coffee as a fellow Canadian from Montreal. So Jake and Nick, the other co-founder of Stock Unlock, are coming to Canada in July, I believe.
Yes.
Yes.
I didn't know if that was a question or not. Sorry.
Yes, in July. And I think we're going to try and plan a meetup in Canada, in Calgary. So if anyone's interested in that, let us know.
And I'm also throwing our free Discord link. Are always out. This is free. We are actually over 1,600 Discord members and have tons of chats that are active all day in there. If you like talking with other like-minded investors, don't really like trading too much, or people drawing dinosaurs on day charts and things like that, we are a bunch of I'm sorry, dude, I just can't. We are a bunch of very value-based, logical, or at least we try to be investors in that Discord. So we'd love for you to join us there. Nick, yeah, see you there. Wink.
We will be there, wink. All right. Are we going for an hour today, Jake? How long do you want to go for?
You're the YouTuber, so you tell me. I cleared my calendar today for Product Hunt launch and streaming. So I am here for it. I also think that an hour is a good amount of time too. I have no clue what's going up there I have no clue what's going on up there in Canada, if I can even peek in. How's your day looking like? Do you have stuff to do?
I'm a little bit busy, yeah.
Yeah. All right. Let's maybe take one or two more questions here. We're going to round it off. Again, my name is Jake. This is Daniel. We go live at least once a week. We have a weekly show. It goes live on YouTube usually around 11 a.m. on Saturday. You can always get them up to date time by being in our Discord, where we will plan the event. If you can't make us live, that's all right. We just won't see your live questions, and you could watch us on Spotify or YouTube. All the recordings are there. If you don't get any question, look at L.to. I think that we've looked at this stock in the past.
Yes, we have.
Low balls, yeah.
I'm actually going. Jake, I'm going to ask you to go rewatch the live stream and just hear what you just said. That was incredible. Okay.
What happened?
That is not the name of the company, bro. But anyways, all right.
Wait. Let me read it again. Low balls. Low balls. So I was born with a very bad speech impediment, and another thing I was unable to pronounce is calisthenics.
Okay.
Calisthenics.
We're gonna move on.
Yeah, save me from myself and mute me.
Any opinions on renewable utilities? Can we do analysis of NPI on Stock Unlock? Yeah, so I think that this company was actually, man, that really got me. Okay.
I'm so embarrassed. I don't know if my face is as like visibly red as it seems right now, but I think I started sweating.
Okay. The stock looks like it has dropped recently. I imagine that's because of earnings. It's down probably 40% from its all-time highs. Dividend yield is now 4.2%. So what is happening with this business? What is its insights? Growing revenue, but diluting. Okay. Dividends. Okay. Financial health. So the shares are increasing. Debt to EBITDA is good. Intangibles are low. Current ratio is average. Revenue is growing. Gross profit, operating income, EBITDA, operating cash flow. Nice. Book value and tangible book value. Nice. Margins are also pretty good. So
you can't get any better. That's a 5 out of 5 right there.
Yeah. So initially, it looks like this company's got a decent balance sheet, growing strong and profitable. Revenue is growing. Over the long term, it is, overall going up. Is that translating to cash flow growth? The scroll is being weird for me today. Cash flow is growing. Okay, that's good to see. Good to see. Debt repayments, dividends paid. Dividends paid are a low amount of cash flow. That's good. CapEx also isn't that high. Free cash flow is also growing. Wow. Okay. So this company went through like some sort of shift, but free cash flow positive. I'm not really seeing that many red flags. I wonder what the earnings said, because this company clearly dropped on earnings. Like if we take a look at the 1 month, it's down, 12 to 13% on earnings. So I would want to know what's going on there. But initially, I'm really not seeing that many red flags. It actually looks pretty decent. Let's take a look at...
Sometimes it's hard to see things in Stock Unlock, such as the guidance. So it is possible, this is pure speculation, that on the call they gave bad guidance. If anyone's familiar, let us know in the chat.
Its shares have grown, it looks like 6x over the past about 17 years. So this company does look like it does, dilute. But maybe if we go to metrics, we can take a look at, where is it? Per share. Let's look at operating cash flow per share. So it does dilute, but overall the company has been growing its operating cash flow per share. One thing that I do know people are skeptical about right now for utilities is they typically have a lot of debt. So if we take a look at their long-term debt, it is sitting at $6.1 billion. Looks like it's kind of been here for about 5 years now. And when interest rates are rising, if a company has a lot of debt like this, then their interest payments could start increasing.
I also just eyeballed it, but it looked like they only had about 1/5 of the cash position as it relates to their debt. It looked like it was a little over $1 billion in cash.
Yeah, I'm not too concerned about that because the company does generate cash flow. But if you go to AQN, this company fell off a freaking cliff and it's down 38% still. But at one point, it lost like half of its value. And the reason for this is because this company took on massive amounts of debt to expand. It's another renewable energy utility company. And if we go to their long-term debt just like freaking skyrocketed. It went from 450 million to 7 billion. And when interest rates were low, like this is how the company was growing, is just taking on massive amounts of debt. But then when interest rates started rising, it actually started eating into the company's cash flows. And what if 12 months? I believe it was this quarter right here. They had a negative operating cash flow quarter because their interest payments got so high. So the company basically went unprofitable for a little bit. I don't know what happened since then, but that's one reason why some people are avoiding utilities right now, or like not as bullish on the sector. So maybe there's something with the interest payments going on with NPI. I'm not sure, but I'd have to take a look at that last earnings report.
Maybe people are finally waking up to the fact that we're within a decade of having a crazy energy revolution, but that is just me with my tinfoil hat on.
Yeah, not even close, in my opinion.
I know you and I, we have fun disagreeing on that one. Really cool guy here again. Jake, are you a developer? If so, what language did you use for the backend in Stock Unlock? We are using Python. And yes, I have been a developer for over a decade. It is my nerdy pride and joy. Before being super into investing, I was and still am obsessed with coding and software engineering. The code behind Stock Unlock is very gorgeous, and I'll leave it at that to not turn this into a developer stream. But yeah, happy to answer more questions there. Also, if you email support@stockunlock.com, always happy to answer any questions you have about site, how it performs, things like that. All right, Daniel, we've been live for about an hour 11. I know you mentioned before, you got a lot of stuff to do. Any last comments, questions, concerns for the stream? If not, I can send us off here.
No, I think I'm good.
Well, I want to say thank you guys so much again. I will not, again, plug Stock Unlock. We did that before. Most of you know who we are. This recording will be posted on our YouTube. And thank you so much for all the comments. We will be going live again with you on Saturday at our regularly scheduled time. I believe that will be Stock Talk episode number 31. Maybe this was 31. We'll figure out what number it is. Yeah, have a great day, everyone. And keep investing. Keep
you.
avoiding bad CEOs.
Thank you, everyone, for tuning in. We appreciate it. We know it was kind of last minute in the middle of the week. Also, it's work time for most of us right now. So, yeah, appreciate everyone stopping in, and we'll see you Saturday. Jake,
thanks,
still
everyone.
There? All right.
Bye,
everyone.